The Reserve Bank has cut interest rates for the second month in a row. Now borrowers and retailers are looking to the big banks to pass it on. Treasurer Wayne Swan says it's welcome Christmas cheer for families. But behind the move is serious concern about Europe's debt problems. Here's finance correspondent Philip Lasker.
Even those predicting a rate cut couldn't quite believe it.
Down 25.
25. Shoppers were out in force, but retailers know people are still wary, even with a second rate cut in as many months.
I feel very happy about it, but I think I'd still try and be a bit cautious.
The unqualified joy came from the Treasurer, Wayne Swan.
Today's decision to cut interest rates again will provide welcome Christmas cheer to families and small businesses. That's particularly welcome around Christmas.
But a second straight cut for the first time in 2 years reflects heightened concern at the Reserve Bank about Europe's debt problems. The bank noted that Europe has yet to craft a solution to its problems, and that will weigh on economic activity there in the future. But also that trade in Asia is now seeing some effects of a significant slowing in economic activity in Europe.
Today's cut, following on from the November cut, really is, I think, the RBA acknowledging those global risks, those concerns and the likelihood that it's going to get worse.
It's more about taking some insurance for the globe looking a little bit worse than what they previously expected than very much to do with Australia.
Today's cut sees the official cash rate down to 4.25% and a saving of nearly $50 a month on a typical home loan. That's if banks pass it all on to borrowers.
Credit tensions globally have also risen. Increasingly, the risk is that they will not pass this on fully.
I believe that banks should pass this rate cut through in full.
The Bank of Queensland has complied. Money markets are expecting interest rates to come down by at least another 0.5% by March. They're even pricing in the chance of an emergency cut in January when the Reserve Bank Board isn't scheduled to meet. The last time that happened was during the recession in the early 1990s. Lower rates for 2012 is now the conventional wisdom. Philip Lasker, ABC News.